Welcome to the Aro Benaiah Show. Today I'm joined by Christian Brim, a finance and accounting strategist who believes that numbers tell stories, and every business has one. Christian has helped business owners identify what is holding them back financially and remove those roadblocks so their visions can match reality. His journey into finance was shaped early by personal hardship, and today he has used that experience to help entrepreneurs turn passion into profit. It's really a pleasure having you on the show, Kristen.
Thank you, Aro. I appreciate it.
Yeah, thank you. So, Kristen, what was it like growing up?
I grew up in what I called a small town in Oklahoma, maybe 70,000 people at one point, and it was pretty dull, honestly. All I could think about as a young person was getting out of my hometown. But I would say fairly normal upbringing, small town America.
So, how did your family bankruptcy change the way you view money at such a young age?
Well, yeah, I said normal, except that my family did have a lot of money for a period of time. They were in the oil and gas industry, and it was, during the 70s and 80s, it was very prosperous. And so, we got to do a lot of things, had a lot of toys, not just kids had toys, the adults had toys, private planes and limousines and helicopters and all that nonsense. But then there was an oil bust and there was a financial collapse in Oklahoma and Texas around the oil and gas industry. And so it had a cascading effect where it just was a downward spiral. I was 16 when that happened. And my family, except for my parents, everybody left town to find employment. Eventually, my family followed when I went to university, but they stuck around so that I could finish high school. And it wasn't the loss of material things that bothered me at all, really. I was not really concerned about that. It was the I don't want to say loss of family, but the fact that the family, dispersed. We were a very close family. I grew up with my cousins like my siblings, and we spent a lot of time together. The family was in business together, so there was no difference between business and family. It was just everything all together all at once. So when that went away, that's the thing that really shook me. And of course, I was at an age where I was trying to figure out my path. And so I was, easily influenced at that point in my life. I went to university. I ended up studying accounting because I didn't know what else to study. I didn't really know what an accountant was or what they did. Originally, I wanted to be an investment banker. And there's an old 80s movie called Wall Street, not Wolf of Wall Street, from recently. It was, I'll think of the actor's name here in a second. Anyway, Martin Sheen and Charlie Sheen. And it was this glamorous lifestyle of investment bankers, Wall Street, and that's what I thought I wanted to do. But I ended up in accounting instead of finance, which is better because, it's a harder degree and you learn more. But even at that age, I knew that what had happened to my family was not what always happened, because I saw others that didn't lose everything and didn't go bankrupt. And so, I didn't know how it could have happened differently, but I knew that it was possible.
Wow. Wow, that must really be more like a tough time owing to the up and the sudden down, which is a whole lot of things to actually make reference of that. So, what were some of the earlier job or work experiences that shape your understanding of value and responsibility?
So my first job out of university was as an auditor. I worked for Deloitte. That was kind of the traditional career path when you were studying accounting, as you went to work for one of the large national or international accounting firms. And I didn't really like tax, so I decided to do audit. And that was an interesting experience because I got to see a lot of different businesses from the inside, different types of businesses, different industries, different sizes. The audit work didn't really interest me or intrigue me, but it was an opportunity to, look under the hood, if you will, of the car. I made the decision to leave public accounting at that point because they laid out this, career path of if you work a certain number of years, then you'll become a partner. And I was at a client's on a Sunday afternoon with my partner. It was just me and the partner. It was a small engagement. And I was leaving. It was 5 o'clock. And he was calling his wife to tell him that he was going to be another couple of hours. And I just realized in that moment, I'm like, I don't want to go down this path, work this hard to work harder when I make partner. Like that doesn't make sense to me. So I left that position, went to work for a small community bank that was actually one of my clients as a commercial lender. And that was very interesting education too, because you get to understand how credit is underwritten, how banks look at financial statements, what are the things they look for when they lend money. So it was that was a very good education in understanding how money actually works in business. But ultimately our bank was bought by another larger bank, and it became clear to me that if I was going to be successful as how I defined it at 27, I was going to have to go and do something myself. I was going to have to bet on myself, if you will.
Amazing, amazing. Thanks for sharing, Kristen. So, how did your earlier financial struggle influence the way you now advise business owner?
Well, it's been a long journey understanding money, not from a technical standpoint. It's not that. It's really, I think the largest influence is your mindset around money. And we all have money mindsets that are developed, they're given to us. We don't go find them. We don't learn them. They're just given to us by our parents, our grandparents, our friends, their parents, the community we live in. We develop this set of beliefs about money. Oh, they're neither good nor bad necessarily. I mean, some people have really odd beliefs about money, but I think the most important part for a business owner is to understand what they believe about money, what they think is true, and, apply that or don't apply it if it doesn't serve them. I'll give you an example. So one of the first books I read when I left university, so I'm a degreed accountant, and one of the first books I read was Rich Dad Poor Dad by Robert Kiyosaki. And he started to dismantle some of my beliefs in what I knew to be true about money. And the very first one was his statement that your house is your biggest asset.
Yeah.
And he walked through the explanation of why your house is not actually an asset, it's a liability. And that example was like, well, maybe everything I think I know, I don't really know. But it's been a 30-year journey for myself, but also helping others unpack their own beliefs, because my beliefs are not your beliefs. You have a completely different set of beliefs based upon your experience, and really helping business owners understand what they think to be true about money, and seeing if it works for them in their business. Because oftentimes those beliefs are what I call self-limiting. They actually keep you from success because you believe certain things about money.
Yeah, amazing, amazing. Thanks for sharing. And I think when you just make reference of rich dad and poor dad, and I just remember a whole lot of things I learned from that particular book too. When I get to read it at first, when I was in school, it changed my whole paradigm about a whole lot of things. And hearing you saying that just speak volumes. Yeah, thanks for sharing. You often say money is your friend until it's not. What do you mean by that?
Well, I'd say two things. One, going back to the beliefs that you have work until they don't work. Some beliefs don't work at all, like around money. Like a lot of entrepreneurs that come from poverty, or money was always an argument at home, and there's this scarcity mindset that money is something to be hoarded, or how you treat money is like a limited supply. That belief is paralyzing for a lot of entrepreneurs because it's the exact opposite of what you have to do in some situations, like spend money. Another belief that I find is not helpful is you have to work hard to make money. Well, I know a lot of people that work real hard and don't make money, a lot of money. I also know people that don't work real hard that make a lot of money. And so, there may be times when that is true, that if you work hard, you do make a lot of money, but it's not always true, right? I'll give you an example of that. If you're really good at what you do and you get proficient at it and quick, then someone comes to you and they say, well, I want you to do this. And it doesn't take you as much effort and it doesn't take you as much time because you've gotten really good at it. If you believe that you have to work hard to make money, well, if you don't have to work hard, it's easy for you and you can do it quicker. That means you don't deserve money. When in actuality, it's the exact opposite. Because you're quicker and because you're very good at what you do, you should actually get paid more. So that's what I mean by money is your friend until it's not, is really more about unpacking those beliefs that you're working in.
Unpacking those beliefs. Okay. I think this is a whole lot, being that what holds a whole lot of entrepreneurs back most times. It's their belief system that have come to be more like a blueprint of how they see the world and
Sure.
how they see finance, owing to their growing up, those particular beliefs they actually had growing up. And I think you just make reference of that, just speak volumes too. Yeah, there's some belief that man they aren't right that we need to look into, especially as an entrepreneur, to actually more like do more with our business again, and just hearing seeing it just speak volume. So why do you believe that so many entrepreneurs avoid looking closely at their numbers?
Well, I think it's fear. Like we avoid things that we're afraid of, right? I think there's a little bit of lack of knowledge. So most entrepreneurs don't have any formal education in money. I'm often asked or told when people find out that I'm a CPA, they say, well, you must be good with math. And my response is, well, the most complicated math I use in my job is arithmetic, and I learned that in second grade. So it's not the complexity of the math. Um, I think I think accounting and finance is more like a language than it is arithmetic or math, and it it is the language that tells the story of your business. And I think if entrepreneurs approached it as more of like, I need to learn a new language skill. I'm going to Nigeria. I need to know some basic terms here. I'm not going to use Google Translate. Then that would ease that anxiety about it, because a lot of people just come to it and say, well, I'm not good at math. I'm not going to be good at accounting or finance.
Yeah, amazing. Yeah, thank you for that. And I think it just speaks volumes to a whole lot of entrepreneurs just have this dominant thoughts that they are not good at numbers, they are not good with thoughts, they are not good with when it comes to the financial aspects, not knowing that everything just boils down to arithmetics, which they may know, but just the fear of the whole of indicate thing that is there just keep them out from actually more like doing that. So, what are the most common financial blind spots you see for small business and trade people that they actually more like they need to really look at?
I think the most common mistake is not knowing what your gross margin is. Gross margin is an accounting term, but it's very simply, it's the revenue that you create less your costs associated with it. So an example would be if you build homes, you buy a bunch of lumber and you buy a bunch of drywall and you're going to pay contractors to go do the plumbing and the electricity. But you as the home builder, those are expenses that come right off the top to get to what I call your gross margin. That gross margin is the value that your business creates. So, the money that you collect and pass through to the lumber yard or collect and pass on to the plumber, you don't contribute any value there. Those are just flow through costs. Someone could go to the lumber yard themselves and buy the materials, or they could hire the plumber themselves. They don't need you. What you contribute to the process is like the organization of it and making sure everybody's on time in the right place at the right time. That's the value you create, and that's what gross margin is. So if you just replace the term gross margin with value, that's the thing that you need to know as a business, because that's, yes, you're going to have other expenses afterwards, like insurance and internet and all those things, but you have to pay them out of that value you create. And you have to manage that and try to increase it. That's the most important number that you need to know in your business.
Amazing. Thank you, Richie. And I think when you just make reference to gross margin is more like the total earning of a company without removing the upfront cost of what it takes to get the job done. And I think it's really lovely. Yeah, thank you. So how does poor money management quietly limit business growth without people realizing it?
Well, I think the biggest thing is, and I was this way in my business for a long time. If you don't have what accountants call working capital, but like you don't have money in the bank to cover your expenses if something goes wrong, think of it as a personal savings account or an emergency fund. If you got fired from your job, how are you going to pay your bills? You need to have one of those in the business, because when you do, it allows you to shift your energy and your thoughts to the future problems, as opposed to just putting out the fires of today. Because if you're worried about how to pay the supplier, how to make payroll, you're in a reactive mode. And you don't make great decisions consistently in that space.
Yeah, amazing. Thanks for that, Christian. So what role does mindset play in how people handle money in their businesses?
Well, I think it's everything. We use profit first in our business and with our clients. And profit first is a great money management tool, but if you don't have the right intent and the right mindset behind it, the tool is useless. You can use profit first and then sabotage yourself. You can take money out of your profit account anytime you want because you're in charge. But so just using the tool doesn't really guarantee you success. You have to be committed to it, and that begins with your mindset.
Or for creative and hands-on entrepreneurs, how can they balance passion with profitability?
Yeah, in my book, in researching my book, Profit First for Creatives, interviewing my clients and other creative entrepreneurs, I found there was this false paradigm that creative entrepreneurs have, where they think that if I do the work that I really love to do, I can't get paid for it, or I can't get paid as well. Or on the other end of the spectrum is I can do the work I don't really like, kind of sucks your soul out, but it pays the bills. And, my statement in my book is, that's a false paradigm. You need to redefine that profit and creativity, profit and passion can coexist. As a matter of fact, in order to have a consistently profitable business, you absolutely need to have creativity and passion.
Thank you. I think that's really, really key. In order to have a business, you have to be passionate about it, but there should be a margin between more like our profitability and the passion coming into being. I think it's really, really very key. So if someone is listening right now and feels stuck financially, what is the first step they should take?
Well, I think, assuming that you were going to use profit first as a tool.
Yeah.
But even if you weren't, I think it's a good exercise. I recommend people set up a separate bank account, savings account, something that they can't really see or touch. And they put 1% of every dollar that comes in the business into that account. So if you're depositing $100 into your normal bank account, you're going to put $1 in that new account. And don't do anything else for 3 months. And then come back and see what's in that account. And you'll be surprised. you'll be surprised because you're not going to miss 1%. You're not going to miss it. But it will accumulate into a number. And once you see that number sitting there in your bank account, you're like, huh, I wonder if I could set aside 2%, right? It gives you an idea of the possibilities of what you could achieve with profit in your business.
Wow, amazing. Thank you so much, Richie. So, what does a healthy relationship between money actually look like for a business owner?
Well, I think it starts with understanding that there is no morality around money. Money has no inherent value other than what we give it. And, it is a tool. It's not bad to have. It's not good to give away inherently. Like it's a healthy money mindset is intentional about what is important to you. If you want to make money so that you can give to charities, awesome. If you want to make money to go take your family on vacations or trips, fine. You want to save for a house, it doesn't really matter. It's what is important to you and then being intentional about it.
Yeah, wow. What is important to you and being intentional about it? Yeah, thank you. So, finally, looking back on your journey, what do you wish more business owner understand about money sooner?
Well, I think the first thing is understand that if you're going to be an entrepreneur, you have to have a basic level understanding of your money and finances.
Yeah.
So many people just try to ignore that part of their business and hope it all works out. It won't. I can tell you that. Whether you're successful or not, I mean, if you're successful and you make a lot of money, you're going to end up owing a lot of taxes, and that's going to be a surprise. If you're bad with money and don't make any money, you're going to, your business is going to shut down. So whether you're successful or not in business, you don't have an option about understanding at least something, a basic level of your finances. Somewhere long ago, I read this concept of know enough. And as a business owner, you don't have to be an expert in finances, but you have to know enough. Just like you have to know enough about legal or marketing or HR or any of the other topics that you as a business owner have to be responsible for. You can't just ignore them. You have to know enough.
Knowing, I think this just speak volume, especially around every topic that speak volumes to your industry or directly related to small business, especially money, for instance. And I think it's very key.
Mhm.
Yeah, thank you so much, Christian. It's really been lovely having you on the show. So, how can my audience connect with you? How can they reach out to you? And where is the best platform to do this?
Well, I am active on LinkedIn, but my website is christianbrim.com, and they can buy the book there. They can schedule a call with me. They can listen to my podcast.
Yeah, amazing, amazing. Yeah, Christian, thank you for bringing down finance in a way, breaking down finance in a way that feel real, honest, and practical. Your stories remind us that understanding money isn't about fear, it's about clarity and control. For those listening, you can connect with Christian and explore his work at christianbrim.com. This has been the Aro Benaiah Show, where we highlight real stories, real skill, and real lessons for people building with their hands and their heart. Until next time, keep building and keep learning. Once again, it's really a pleasure having you on the show, Christian.
Thanks, Aaron.
Yeah, thank you so much. Yeah.